Hello and welcome to your daily dose of Satoshi's news. Today's date is Monday, the 9th of September 2024, the year of a million transactions per second or more. Experience the best of both worlds today at betbitcoinsv.com, the best casino and sports betting on chain. Have a little flutter in private using the original protocol and genuine Bitcoin. Right, let's see what we've got in store for us today. Quite looking forward to going through this article here from CoinGeek saying Bitcoin mining profits elusive as difficulty hits all-time high. That was sent to me by someone. We've got an article here by Craig. I mean, this is absolutely epic. I just don't know how he's able to churn out so much work. Like, honestly, just mind-blowing. Obviously, not going to be able to get through all of that, but we'll just have a read and see where it's going. And then we'll have a quick look at these figures, because I'm just kind of curious to see what they're like, and that'll be the end of the show. Right, let's get into it.
Satoshi, like a cowboy in the West, riding on the blockchain that they call the very best. 1 million strong, them transactions flying free. Just wait for the Terra node, you'll surely see.
Here we go. Right then, so BTC mining profits elusive as difficulty hits all-time high. Tell you what, we may as well just check that out while we're here. Oh, yep. Yeah. Second all-time high ever. Whew. So, block reward miners on the BTC network had their least profitable month in nearly a year in August, leading to bankruptcies, share dilutions, and other Hail Mary efforts to stave off the inevitable. BitBo data shows. Oh, let's have a look at this. BitBo data. Oh, you've got to be kidding me. I'm not telling them that I'm a human. So BitBo data shows BTC miner revenue hitting $827.5 million in August, less than half of the total from this year's peak of $1.93 billion in March, and the lowest total since September 2023. Transaction fees contribution to the total also slumped to a year-to-date low of $20.8 million. Meanwhile, mining difficulty hit an all-time high in August, making the average cost of producing a single BTC token, that's GregCoin, significantly higher than the fiat value of the said token. The financial toll of competing to win unprofitable rewards is proving disastrous for smaller miners. On August 24th, Rhodium Enterprise filed for Chapter 11 bankruptcy protection in the US Bankruptcy Court of the Southern District of Texas. Rhodium was already struggling to repay the $45 million in loans, including more than $26 million owed to rival Riot platforms. But this spring's halving event, which reduced the block subsidy to just 3.125 GregCoin, proved the final straw. Over the weekend, Bloomberg reported that Rhodium had received court approval for a loan of 500 GregCoin, currently worth around $29 million, from Mike Novogratz Galaxy Digital firm. The court approved the BTC-backed plan because the proposed interest rate was 9.5% rather than 14.5%, rate that Rhodium accepted on a $30 million loan in cash. Other mining operators are turning to a variety of solutions to transform losses into profits. Core Scientific recently raised $400 million, set up an exchange for that, in new debt, which it used to pay down $267 million in older debt and take advantage of lower interest rates. Riot recently announced plans to issue new shares, which benefits the firm but dilutes the value of existing shares held by investors. Riot's total outstanding share count has increased by nearly 1/3 since the start of the year, while its share price is currently trading only slightly above its 52-week low. The green mining corporation CleanSpark lost $236 million in its most recent quarter, leading the company to announce plans to double its amount of common stock. A kicking the can down the road tactic that shareholders will be asked to approve at the special meeting in October. Tellingly, CleanSpark made its announcement on the Friday before the long weekend, as its share price slumped to a low not seen since February. MARA, formerly Marathon Digital, appears to have given up on mining as a profit source, adopting the if you can't mine BTC, buy it strategy. Of the $300 million raised by Mars' latest debt offering, $249 million was used to buy 4,444 BTC at an average cost of $59,500, which is $1,000 higher than the BTC's price at the time this was written. I'll gladly pay you Tuesday for a block reward today. Smaller miners' lack of big boys' ability to raise cajillions via debt equity, but decentralized BTC mining pool Locker Mining recently floated the idea of allowing miners to sell tokens they've yet to mine at a discount to institutional investors. The idea is that smaller miners could obtain the cash they need right now to keep their mining rigs humming. Good grief! I mean, this is desperate stuff. Locker promotes the tokenized forward hash rate contract as a means of monetizing hash rates to access capital needed to scale up operations without giving up equity or operational control. But again, given the unprofitability of mining GregCoin, it's unclear how miners entering into these contracts will ever make ends meet. Yeah, exactly. It is a hopium. It is literally maxed out hopium, is what this is. There is nowhere to go. Literally, Bitcoin, as Satoshi's vision was, if they had allowed it to continue, would have been millions per coin by now. Millions per coin. There would have been literally, hundreds of millions of dollars in the block fee. But have they done that? No, they've royally screwed it over, which is why everybody's, again, shit for brains. Oh, good grief, Stupid is as stupid does. Shit coiners, shit for brains. That's all we can say here. And they say you're reaping what you sow. That's exactly what's going on here. They are in shit. They are in shit from shit mining, from shitcoin mining. Like, would you believe it? The irony. Frankly, none of the solutions described above will fix the irredeemable problem here. Exactly. Namely, GregCoin's deviation from the revenue model described in the Bitcoin white paper. The artificial bandwidth constraints imposed on Bitcoin by the Greg core developers in 2017, resulting in the GregCoin chain currently masquerading as Bitcoin, prevent the chain from handling any more than a trivial volume of transactions per block. Bitcoin creator Satoshi Nakamoto was clear that the periodic halving of the block subsidy would eventually make mining unprofitable. Exactly. Satoshi never expected Bitcoin to moon to the 7-figure fiat pipe dreams of today's BTC maximalists. Yeah, he did. The idea was always for the individual block to scale well beyond their 1 megabyte origins in order to handle a sufficient volume of transactions to allow transaction fees to supplant the block subsidy. By contrast, the BSV blockchain honors Satoshi's vision by putting no artificial cap on block size, allowing it to handle transaction volume that puts Visa and MasterCard to shame, and at significantly lower cost per transaction. This capacity also gives BSV superior management abilities, offering utility that GregCoin can't hope to match. Central Pork. The two biggest mining pools, Foundry USA and Antpool, accounted for a combined 54.1% of all blocks produced in August. Throw in their affiliate pools and the duopoly's dominance rise even higher. The concentration of effort has potentially serious consequences for GregCoin's future security and pokes further holes in the GregCoin's beloved claim of decentralization. And further concentration is on its way. For well over a year now, Riot Platforms has been pursuing a hostile acquisition of rival Bitfarms, and Riot boosts its stake in Bitfarms to 18.9% last month. But Bitfarms isn't taking this takeover lightly, announcing on August 21st that it was acquiring struggling rival stronghold Digital in a stock-for-stock merge transaction valued at $125 million plus the assumption of $50 million in debt. While Bitfarms spun the deal as a significant boost to its existing hash rate, it also makes itself a tougher meal for Riot to digest. At the very least, it gives Bitfarms a stronger voice at the negotiating table around Riot, providing should Riot prove unwilling to relent in its pursuit. Bitfarms isn't the only operator adopting a survival of the fattest strategy in the post-halving environment. Earlier this summer, CleanSpark paid $155 million to acquire debt-laden rival Grid Infrastructure. More of these details are likely in the offing as investors come to terms with the fiscal reality of GregCoin mining and the realization that no one appears to care about the decentralized trope anymore. Pivot. Bitfarms CEO Ben Gagnon said his company's acquisition of Stronghold was part of a strategy to diversify beyond GregCoin mining to create greater long-term shareholder value. Gagnon singled out artificial intelligence, AI, and high-performance computing as two areas of which its mining rigs might be repurposed. This is an increasingly common fallback strategy among major US miners, whose price targets were lowered by JP Morgan analysts in August due to share count dilution, lower GregCoin prices, and rising network hash rate. At the same time, Bernstein analysts suggest that whatever interest institutional investors still retain in mining operations was due to the belief that these miners would eventually be compelled to switch to serving as AI or HPC data centers. BTC mining, like GregCoin, will limp on a while longer purely out of momentum and the sunk cost fallacy. But the handwriting is on the wall. A utility-free network with an economic model that ignores basic arithmetic and contributes to the planet's warming, all to enrich a handful of hodlers. ? Time to take this ailing hound behind the barn and put it out of its misery. Good point. Pay, brackets Donald, to play. At this point, the only thing that's going to pull GregCoin miners' butts out of this fiscal fire is the election of Donald Trump as US president in November. A former crypto foe, Trump did a hard 180 this year around the time he realized that crypto bros had a lot of money and he could get some of that scratch just by offering a few vague promises. Trump has voiced several mining-friendly policy proposals, including ensuring unrestricted access to electricity for US-based miners, while the Republican Party's official platform offered the vague assurance that Trump would defend the right to mine GregCoin. As for how Trump's transformation transpired, NBC News recently reported on a trio of individuals whose orange-pilled Julius at a meeting this spring. Among this trio was Amanda Fabiano, who heads her own Fabiano consulting firm and also serves on the board of TeraWulf, this world's sixth largest mining outfit. Fabiano previously served as head of mining for Galaxy Digital. Fabiano said she was approached by David Bailey, promoter of the GregCoin conference that Trump appeared at in Nashville in July. Before that appearance, Bailey tried to set up a roundtable on mining with Trump's campaign team. Tasked with assembling the mining representatives for this prospective meetup, Fabiano said one of the primary concerns was he or who would be willing to put up dollars, kind of put their skin in the game. NBC reported that those who ended up going to the meeting at Trump's Mar-a-Lago resort in Florida first had to ante up $500,000 apiece to a fundraising committee. Among those present were execs from Core Scientific, Mar, Riot, and TeraWulf. Fabiano said the encounter with Trump showed him that this industry is real and they're showing up with dollars. Ain't it fun watching the sausage getting made? Watch Terranode in the Web3 world with edge-to-edge electronic value system. Hey, that was actually quite an enjoyable article to read that one. I mean, it just goes to show you these GregCoin miners are literally in deep shit, and we are talking deep shit, like well into that hole. Jeepers. Right, so let's have a look at this. So this is Craig getting stuck in as well, talking about welfare states and stuff. So let's see what he says here. The welfare state and the infrastructure state, a tale of two futures. Government intervention in the form of welfare programs often begins with good intentions, providing a safety net for the vulnerable, reducing poverty and promoting equality. However, these programs are inherently flawed in their assumptions about human nature and economics. Over time, they create a class of dependents who become reliant on the state, rather than fostering a culture of productivity and self-reliance. Welfare policies shift the focus from wealth creation to wealth redistribution, and in doing so, they undermine the very foundations of long-term prosperity. Well said. Well said. That is loving that. In contrast, a government that prioritizes infrastructure investment lays the groundwork for sustained economic growth by building roads, ports, energy grids, and digital network. It creates the conditions for wealth generation, innovation, and opportunity. The difference between these two models, welfare versus infrastructure, is not just a matter of short-term relief versus long-term planning. It reflects a deeper philosophical divide, one that touches on the nature of human achievement, the role of the state, and the moral responsibility of individuals in society. This distinction is critical for understanding why welfare states stagnate while infrastructure-focused states thrive. Wow, that is epic. That is epic. So this is actually a quote here from Benjamin Netanyahu, recorded at Pfingstbar in Jerusalem 1990. He said, "America is a golden calf and we will suck it dry, chop it up and sell it off piece by piece until there is nothing left but the world's biggest welfare state that we will create and control." That's what's going on at the moment. "This is what we do to countries that we hate. We destroy them very slowly." And this is precisely what Craig is basically explaining here. This is Craig is explaining how they're doing it. Amazing. The dependency trap, welfare's long-term consequences. Welfare programs may seem compassionate on the surface, but their long-term consequences reveal a different story. When individuals come to rely on a state aid for their livelihood, they lose the incentive to strive for self-reliance and personal growth. Welfare fosters a mindset of entitlement, where individuals expect the government to provide for their needs rather than seeking to earn their way through hard work, innovation and creativity. Over time, this dependency erodes not only the economic productivity of a nation, but also the dignity and initiative of its citizens. Yeah. Everyone goes stupid. Everyone believes that, safe and effective. Ayn Rand's philosophy of objectivism offers an apt critique of the welfare state. According to Rand, human beings are rational and capable of achieving great things through their own efforts. The welfare state, however, denies this fundamental truth by encouraging individuals to live at the expense of others, rather than through their own productive work. Welfare, in Rand's view, is not merely an economic misstep, it is a moral failing. It punishes the productive by forcing them to subsidize the non-productive, and it rewards the non-productive by allowing them to live without contributing to society. Yeah, exactly. The result is a culture of mediocrity, where innovation and ambition are stifled by the burden of maintaining an ever-growing dependent class. Oh, what was that line there? Yeah. It punishes the productive by forcing them to subsidize the non-productive, and it rewards the non-productive by allowing them to live without contributing to society. That's actually fascinating there, because this is what they've effectively done with fiat currency. So if you control fiat currency, which it is controlled, then you can dictate markets and you can push the economy in the direction that you want it to be. And if you want the economy to end up being a welfare state, that's what you do. You create bullshit jobs that don't actually produce anything. Whereas if the economy is actually using a true money, that means that effectively the economy starts moving in the direction that the society wants it to go in by benefiting everybody. Things are produced to actually give value to people's lives, things that are valuable, that make their lives better, like free energy devices, like cars that run on renewables, like water, all this kind of stuff. Whereas at the moment, if you've got those in control of the financial system who don't want those markets to emerge because it doesn't profit for them and they can't control us through it, then they're just simply not going to allow that market to exist, because they won't give them financing. It's as simple as that. So yeah, great point there. The problem with welfare goes deeper than simple economics. It affects the very fabric of society. Human beings are not meant to live as dependents. They are meant to create, to innovate, to achieve. Welfare programs rob individuals of their sense of purpose, trapping them in a cycle of dependency that becomes increasingly difficult to escape. This is not just a problem for the individuals who rely on welfare, it is a problem for society as a whole. As more and more people become dependent on the state, fewer resources are available for productive investment. Taxes must be raised to fund welfare programs, which in turn discourage economic growth and innovation. The welfare state becomes a vicious cycle of stagnation, where the productive are punished and the dependents are rewarded. Oh, this is great. The infrastructure model, building the foundations for growth. In contrast to the welfare state, a government that focuses on infrastructure creates the conditions for sustained economic growth. Infrastructure investment is not merely an expenditure, it's an investment in the future. Roads, bridges, ports, energy grids are the arteries of economic activity. They reduce cost, increase efficiency, and open up new markets for trade and investment. Infrastructure doesn't just redistribute wealth, it creates it. Absolutely it does. Absolutely it does. Ayn Rand's concept of rational self-interest aligns closely with the idea of infrastructure investment. According to Rand, individuals have the right to pursue their own happiness and success, and the role of government should be to protect those rights, not to provide for those who are unwilling to provide for themselves. Infrastructure investment does exactly that. It empowers individuals by creating the conditions in which they can succeed through their own efforts. It does not give them handouts, it gives them the tools to create wealth and improve their own lives. The economic benefits of infrastructure investment compound over time. A road built today doesn't just improve transportation efficiency in the short term, it generates wealth for decades to come. Each new infrastructure project creates new opportunities for businesses to grow, for jobs to be created, and for innovation to flourish. The benefits are not temporary, they are long-lasting and far-reaching. Consider two countries that start with identical economies valued at £100 billion. One nation chooses the welfare model and annual growth of 2%, while the other chooses infrastructure model growing at 4% annually. After 50 years, the welfare state economy has grown by £269 billion, while the infrastructure state economy has grown by £711 billion. What began as a small difference in growth rates has become a vast chasm between the two nations. The infrastructure state is more than twice as wealthy as the welfare state. This is the power of compound growth. Small differences in policy decisions, when compounded over time, result in dramatically different outcomes. A moral argument, individual responsibility versus collective dependency. The difference between the welfare state and the infrastructure state is not just a matter of economics, it is also a matter of moral philosophy. The welfare state is built on the premise that individuals are entitled to live at the expense of others, that the productive members of society have a duty to support the non-productive. This is a fundamentally flawed view of human nature. Ayn Rand argues that human beings have the right to pursue their own happiness, and that the right includes the freedom to reap the rewards of their own efforts. The welfare state, by forcing the productive to subsidize the non-productive, violates this principle. The infrastructure state, by contrast, aligns with a moral philosophy that values individuals' responsibility and self-reliance. It does not seek to redistribute wealth, it seeks to create the conditions in which individuals can succeed through their own efforts. It rewards hard work, innovation, and creativity by providing the tools and environment in which these qualities can flourish. The infrastructure state empowers individuals to achieve their full potential, rather than trapping them in a cycle of dependency. Oh, this is great. This is great. I might have to come back and read this. Oh, this is a fantastic read. This is a fantastic read. I might just carry on anyway. Right, where do we get to? Punishing. The infrastructure state, a legacy of opportunity. In contrast to the welfare state, legacy of dependency, the infrastructure state builds a legacy of opportunity by investing in roads, bridges, ports, and energy grids. We just read this one. I think it's this one. The false compassion of the welfare state. One of the most pervasive myths about the welfare state is that it is compassionate. The idea that the government should provide for those who cannot provide for themselves seems noble on the surface, but in reality it's anything but. Welfare programs do not empower individuals, they degrade them by encouraging dependency. Welfare robs individuals of their sense of self-worth and purpose. It traps them in a cycle of mediocrity, where they are reliant on government handouts rather than striving for success through their own efforts. True compassion is not about giving people what they want, it's about giving them the tools to succeed on their own. I think I've just read that bit. The welfare state and the infrastructure. Oh, we'll have to come back and read that. That is awesome. That is awesome. What a fantastic read. That was great. That was great. Right, let's just a quick check on the figures then. Don't want the show to go on too long. 24 minutes already. Movement in the price there. $45 here on CoinDance and $45 by Preve, top left of the screen there. Transactions are still low. I'll have a quick look at the block size. Got 6 megabyte block there. Nothing to write home about. 46,800 times cheaper to transact on Bitcoin than GregCoin. 45% comparable loss though, mining on Bitcoin to GregCoin. But that just shows you the competition for Bitcoin over GregCoin. Let's have a quick look at the mining here. So good to see Cuve increasing their mining to 30%. QD Link 19. Gorilla Pool back up to 4.73. So it looks like mining. Oh no, it looks like other miners possibly jumped off the chain. Very good. Let's have a look at this. Look at that. So we're still reaping the rewards of the Neil Oliver effect. Look at that. Look at that. Let's have a quick look at Bitcoin versus USD then. There we go. What is this? Alright. Yeah, just bobbing along sideways, going up just a little bit there. Orange Gateway, yeah. Bitcoin versus GregCoin, yeah, very good. We've got a $1.9 trillion market cap. GregCoin got a 24-hour trade volume of just under 2%. Price is traveling sideways. Be rude not to have a look at Bitcoin while we're here, of course. Let's have a quick look. Oh, look at that. Nice movements there. Asks $1.2 million. Let's have a look at the Neil Oliver video. Oh, it's 112,000 views. Let's have a look at that.
There are 3 simple changes I tell all of my arthritis.
There we go. 112,000 views. Let's have a look at Silverfish. We're at 27.1k views on Silverfish. Excellent. Right, there we go. We'll leave it there. I might come back and read that article by CSW, just do a show on its own. But that was great. So if you enjoy these updates, please ding your please ding a donation for your appreciation to either Satoshi@Sembi.com, Handcash.io, Simply.cash, Relasia.com, Rockwallet.me, or Senti.ch. We'll leave it there. Hope you enjoyed it as ever. Be aware, take care, stay safe out there, and we'll see you in the next one.